So in this video, we'll be covering market structure, right? Market structure. My fault for the handwriting. I'm not the best handwriter, but market structure. What is market structure? Market structure consists of two different things, downtrend and an uptrend. Also, they can be consolidation too, but that's not really structure. It's just consolidation where price is just moving up and down in a range, and it's not really doing anything. But let's go over an uptrend. What is an uptrend? An uptrend looks like structure that is going upwards, right? We're creating highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. So in an uptrend, we are creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Obviously, the charts never look this sexy where price is just doing exactly this. Like, it's never this sexy, obviously. But this is structure on the most fundamental basic level, right? This is what you call an uptrending structure. This is where price just continues to go up, right? Sometimes you're going to have price where price looks like this. Price looks like this. It goes up, comes back down, but it goes back up, comes back down. This is still an uptrend. Although, yes, it came and it broke this low. This broke this high. This high created a high. This high created a new high. This high created a new high. So it's still creating higher high structure that continues to go in the uptrending direction. So that's an uptrend. Basically, a downtrend is just the very opposite of what an uptrend is, right? In the simplest form, it's just the same thing in the opposite direction. So, downtrend. Downtrend. Downtrending markets look like this. Where price creates a low, lower low, lower high, lower low, lower high, lower low, lower highs, lower low, lower high. As I said, price never looks this perfect. Like, you'll never look at the charts and price will be this perfect, where you're just having lower lows and lower highs, lower lows and lower highs. More times than not, you'll have a chart that looks like something like this. You have a chart moves something like it make a low. Oh, that's not dry yet. It makes a low. Makes a low, make a lower low, then might break that low, break structure, then it creates a new low, and the structure continues. It could even come back and break two highs. It comes back and make another low. This is still structure. Why? Because this is the low. We got the low right here. This is the lower low. This is the lower high. This is now the new lower low. Why is this new lower low? Because it comes lower than this low. Price goes lower than this low. And this is the new lower low because price goes lower than this low. And then, although we had price come higher, where it looks like it broke structure right here, it broke structure right here and right here, price then comes down and makes a low lower than this low and lower than this low. So price is still creating lower lows. So in simple form, this is just structure. This is how I view structure. Lower highs, lower lows, higher highs, higher lows, right? Quick recap. Quick recap. This right here, downtrend. On this side, oh, where I put the marker? That's crazy. On this side, we have an uptrend. Price never looks this sexy, but these are the two directions that price goes in either direction. They either go down or goes up. There's only two buttons that you are allowed to press on the MT4. If you use MT4, Trade 8, Ninja Trader, whatever platform you're using, there's literally only two buttons that you could press. You can press buy or you can press sell. That's it. Buy because you want price to go up. Sell because you want price to go down. There's nothing else that you can do in the markets. There's no in between button when it's consolidating. There's no other button. There's nothing else. You only have an uptrend or downtrend. That's it. That's the only two things, that up or down, buy or sell. That's the only two things that you are allowed to do. So, have you ever heard that the trend is your friend? Always remember that. The trend is definitely your friend. You always want to trade with the trend. With the trend, you're going with the big boys. You're going with the institutions, the banks, the HF high frequency traders, the hedge funds. These are the people who are really movers of the markets. Market movers. These are the people with the real money. These are the people who are pushing price in one direction or the other. So when you see a trend, the big boys are moving the market. These are them. Institutions, banks, high frequency traders, like hedge funds. They're the ones that's moving the money. So it's easier to go with the trend. It's easier to trade with these guys and try to go with where they're going than to go against them, because they're the ones with the real money, the deep pockets, the real millions and millions and millions of dollars that's pushed out in the market. So it's always important to remember, you want to go with the trend. You want to go with the big boys. When you see the trend, just think about, these are where the big guys are going. These are where the deep pockets want the money to move. And as long as you more times than not go with the big boys, you'll make money more times than not. Obviously, you have to factor in how much you're risking, risk to reward, all that stuff. You're not over trading, over leveraging, all that stuff. You have to factor that into. But what's the trend? Most likely you're going to be in the direction. So this is how I trade. I trade by trying to follow trend patterns. I trade trend patterns. So, as you know, that is an uptrend. That is a downtrend. As they say, buy low, sell high, right? So say price is right here and it's making a pullback, right? Price is making a pullback. This is where you would call a support / resistance, depends on where you're at right now. This will be support if price comes down here and it bounces. I would try to catch a play when price is moving back down before it broke structure, as long as it doesn't break structure. Because if it breaks structure, now I'm confused. I don't know. Maybe it can keep going down. Maybe it could keep going up. Who knows? At that point, you got to wait for it to actually tell you. But if it doesn't break structure and it comes back down to an area of interest, which I would call supply and demand, support and resistance, I think they're the same thing. If price comes back down to one of these areas, I'm looking to take an entry right here to take it back up, to ride the wave with the big boys, with the hedge funds, the banks, the big movers of the markets, the market movers. This is what I want to do. I want to be on the side with the big guys. It's easier to just try to catch the little crumbs that they leave behind. I promise you, trust me, if you get crumbs of what these guys are moving in the markets, you'll still be all right. You'll definitely still be all right. Right? So something that looks like this. The market is going down. It's making lows. While market is coming back up to the area, I call these areas AOI. My areas of interest, supply and demand, support and resistance. I said it again. I think they're the same thing. Correct me if I'm wrong. Hit in the description, in the comment section. Let me know if I'm wrong, if there's a different meaning for these words. I think they're the same exact thing. But price came back down, came back up, then it went lower. Where price went now lower, I'm looking for it to pull back to the area that first started to make a decision here. It made a decision right here before it came back up. And then it made another move down. So if price comes back here, this is now where I want to sell. I want to get an entry around here. Even if price moves up a little bit more. Say price moves up a little bit more. It's not, as I said, it's not perfect. It doesn't just go straight. Sometimes it does. But most times it doesn't just go straight exactly to the area. Then start dropping off. Most times it go a little higher or maybe a little lower. It can go directly. You just got to learn your entry model, how you get into a trade. But I'm trying to get in at this area of interest that was to the left. I always look to the left for areas of interest. That's why it's very hard for me to trade higher, like all-time highs, because there's nothing to the left. There's nothing to the left that gives me indication of where price has went before and where it could possibly go next. So once price gets here, I'm trying to look for an opportunity to sell it back lower to go with the trend of the big boys. It's always, as I said, it's always important to go with the trend of the big guys. If you are in alignment with them boys, with the big guys, the money movers, the deep pockets, you'll be all right for the most part. But this is market structure on a basic fundamental level. I'll be creating more videos on how to draw out market structure and how I take my trades going into structure, because on every time frame I trade on, 1 hour time frame, 15, 5 minute, 1 minute, on every one of these time frames, you see structure. There's structure on literally every one of these time frames. There's structure within structure within structure. On this, let's call this is the 1 hour chart right here. On the 15-minute chart, when price is moving this, on the 15-minute chart, you see this going up. This is what it looks like on the 15-minute. It's making structure like that. On the 15-minute chart, you see all of the structure within the 1 hour candle that's just going straight up. It looks like structure on the 15, the 5 minute, or the 1 minute. Structure within structure within structure within structure. But that's my video, y'all. I'll be back to make another one. Let's go.